Right, hi guys, it's Avi once again. We're going to be looking at forex trade now, and trying to find an example of an entry point and trying to run through it, and hopefully all of us should be able to follow this. Um, right, so we're looking at pound US dollar once again. We're looking at the 8 o'clock bar where the cursor is at the moment. So we have starting from the current day, we had midnight, 1, 2, 3, 4, all the way up to 8 o'clock. Now the first thing we're looking at is the Bollinger Bands up here where my cursor is, and then working all the way down to standard deviation and then going to other signals. So the first thing we're looking at is the Bollinger Bands, and to me they look as though they are pinching. I'm just going to move my cursor away so we don't have a vertical line there blocking the way, and hopefully you should all agree that they are starting to pinch. Now to clarify this, we're looking at the standard deviation to see if it falls into the current range that we're looking for. Right at the bottom here, standard deviation, we can read off a value of 28, and if we're going to previous pinches like the one over here, we can see that the value of standard deviation is about 26, and another previous pinch over here, the standard deviation was about 40. Going to another one, it was about 29. So anything below 30, well 40 in reality, is good enough for us to trade. So we are definitely assessing that the market is ready for us to trade if the standard deviation at this moment in time is 28. Right, so now that we have assessed that the market is ready for us to trade, I'm going to zoom in so it's easier for us to see. The next signal we're looking for to see which direction we're going to trade in is the MACD. Now let me just go onto another thing that I've prepared on Word, a few screenshots to see what type of signals we're looking for from the MACD. Right, so there's 4 different scenarios we can have from the MACD, which should tell us to do either buy, which are these 2 here, or sell, which are these 2 here. Right, so over here we have both a blue and red line. You don't really need to know what these blue and red lines mean or what they are consisting of. In reality, you need to know what they are telling you. So over here we have the red line being above the blue, and then the blue crossing above the red and continuing upwards, and really you need to know what this signifies. So from the MACD you can now assess that this really signifies a buy signal where the blue has crossed the red and is going upwards. Also, another scenario of a buy signal is when if the blue is above the red, if they're running either parallel or channeling together, a clear divergence away from each other like this. So from this point here to this point, the blue has definitely diverged away from the red, so they're no longer parallel to each other. Right, now we have another scenario, which is, even though I've written sell here, I'm just going to clarify that it's sell short. So as not to confuse anyone. Right, so we have 2 scenarios once again on selling short. Here we have the blue line above the red, and the blue line has crossed once again and is going below the red this time. Now what this signifies is for us to go short in the market, so for us to sell short in the market. Now another scenario of a selling short is when the blue and the red are channeling together, but this time the blue is below the red, and then the blue starts to diverge away from the red. So it doesn't cross it, but diverges away. So at this point here, the blue and the red are almost parallel to each other in the channeling. After this point here, the blue starts to diverge away. So from this point to this point, it is still a bit close, as though whether they are parallel to each other or they're still channeling, but definitely from this point onwards, the blue line is definitely diverging away and should definitely be interpreted as a sell signal. Sorry, a sell short signal. Right, over here I've generated a simple checklist which you guys can also recreate. It's purely saying it has 2 steps. Is the market ready for us to trade? And it consists of looking at the Bollinger Bands and the standard deviation. and hopefully you understand what you're looking from this. So have the Bollinger's pinched, it's either yes or no, and really for you to go onwards, you have to, it has to be yes. If it's not yes, really you're not looking at anything else onwards. So step 1 isn't satisfied, you can't look at step 2. So have the Bollinger's pinched. If it's a yes, then the standard deviation also must be low. So is the standard deviation near recent lows? Yes. Then and only then can we move on to step 2, which is which direction are we trading in. So we've done half the work. Now we're on to the next bit, which is, I guess, the most important work to do. Has the MACD given you either a clear buy or sell short signal? Yes or no? So by that, I'm referring to those 4 scenarios which we can get from a MACD. So if we go back to the chart, we can clearly see here that the blue line was above the red. It came converging towards the red, and it's now crossed the 8 o'clock. If I zoom in a little bit more, you may be able to see it slightly better. So at 8 o'clock here, I'm going to move my cursor slightly to the left so you can read off this. The blue line has now crossed below the red, and that is a sell signal for us to go in. So back to our checklist. Has the MACD given you either clear buy or sell short signal? Yes. We're then moving on to the next bit, which is, does the momentum support the direction of the MACD signal? So really what we're asking is the momentum over the past 1-2 hours, has it been going down because the MACD is telling us to sell short? So over the past 3 hours, in fact, the momentum has been trending downwards. So really it's simple to read off the momentum. Has it been going downwards or has it been going upwards? On this occasion, we want it to show that it's going down, and it definitely is going down. So back to the checklist once again. Does the momentum support the direction of the MACD signal? Yes. Then moving on to the next step. Is the volatility below previous highs? Yes or no? So at this current moment in time, the volatility is at this level here. And if you just hover your cursor like I'm doing here on that point, you get a red horizontal line which clearly shows that the volatility has been much higher than it is at the moment. If you would agree that there's a slight peak at this point, and if we do back out of the data, you'll definitely see it's gone out further as well. So back to our checklist. Is the volatility below previous highs? Yes. So we have met both step 1 and step 2, and now we're ready to enter the trade going short. So after this bar completes, so we'll be assessing all this data at roughly around 8:59 or so, and if these signals are still correct for us to trade going short in the market, we'll be entering on the next hour. So at 9 o'clock on the dot, we'll be entering at market.
That's great, Avi, giving us those 2 steps very, very clearly. We can't move on to step 2 unless step 1 clearly meets the criteria. I just wanted to ask you a question about, because we know it's an hourly chart, and you just mentioned, 8:59, etc., but it looks like it's 8 o'clock there, and that bar is going down, because it's filling up nicely in red. That means it's going down. We're looking to sell short, obviously, on this one here. But sometimes people get confused with that, because that is actually a whole hour's bar, isn't it?
Right, yeah, sorry Marcus, that's a very good point there. As we're looking back historically in the data, we need to come under the understanding that when we're looking back at these hourly datas, this is the 8 o'clock bar, which really represents everything that's happened from 8 o'clock to 8:59 and 59 seconds. So literally 1 second until 9 o'clock is when this bar would have completed, and when it comes to 9 o'clock you'll be getting a brand new bar which looks pretty much similar to the 5 o'clock bar here, without any body at all, just a simple dash. So the reason that we're saying that it may be slightly confusing that I said 8:59 is that we'll be looking at, we would only see this bar at 8:59 as it is. Otherwise it would be at 8 o'clock it may have slightly gone upwards. It may be down to here around 8:30, 8:45 up to here, but at 8:59 and 59 seconds it has closed here, and the 9 o'clock bar has opened at this point.
Yeah, I mean, in actual fact, I mean, I'm assuming because these are advanced strategies that most people here, Avi, they're going to know this stuff. But just want to make sure that they do know that, this bar here, for example, started at 7 o'clock, and it did whatever it did, came back down until 7:59, and then at 8 o'clock a new bar opened, and it did whatever it did, and this one went down and formed this until 8:59, and then the next one would be the 9 o'clock one opening, etc., and so forth. So at this stage, let's see what happens to the actual trade.
Right, so now that we entered the trade at 9 o'clock, we're going to see what happened. We're selling short, and as we can see from this current 9 o'clock bar, the bar went down into our favor, so we would have been in a profitable trade. Now on the next video we're going to be talking about exiting and the criteria that has to be met there.